Market sentiment is about to change soon. Traders welcomed some signs of progress in the peace talks between Russia and Ukraine. Besides, markets priced in the scenario of faster rate hikes by the US Fed. And now, investors are carefully monitoring the economic calendar to evaluate current global economic conditions. Investors have detected a precursor of a global recession. They are alarmed because the curve of the US Treasury yields have turned inverted. They think is that treasuries with a shorter maturity provide higher yields than treasuries with a long-term maturity. It's a rare occurrence in the face of a global economic crisis. The same happened ahead of the financial crisis of 2008 and the COVID-driven crisis in 2020. Let's discuss what events and economic data could serve as a market catalyst in our regular video calendar on InstaForex TV channel. Apart from the new coronavirus threat, the global economy is vulnerable to the geopolitical jitters. Due to the brutal hostilities in Ukraine, the European Union countries are discussing the embargo on Russian energy imports as a political leverage to step up pressure on Moscow. For the time being, the European countries cannot impose an immediate embargo. Moreover, German trade unions warn that such restrictions will entail sharp unemployment growth in the euro area. On Thursday, investors will get to know what is going on in the labor market of European Union countries, Germany in particular. The consensus suggests that employment expanded in March. The number of jobless people has been going down, and however, market participants could neglect this information. Importantly, consumers are commonly reluctant to spend cash due to economic uncertainty and the looming crisis. On Thursday, during the American trading hours, the report on personal spending and income will be on tap. Personal spending is expected to rise by 0.5% in February. Investors give priority to this indicator because consumer spending accounts for more than two-thirds of the US GDP. Apparently, Americans are not poised to increase spending as the consumer prices jump to the strongest levels in the last 40 years. The European Union countries are also suffering from catastrophic inflation. Investors are aware that an annual rate of consumer inflation in Germany surged by 7.3% in March, the fastest rate since 1981. And flash estimates for other EU countries are projected to confirm equally fast inflation acceleration. This data will be available on Friday. The current CPI has already been 3 times as high as the target level. And due to soaring in energy prices, the CPI is likely to extend its rapid rally. Procrastination of the ECB pursuing its ultra-loose monetary policy and delaying the decision on a rate hike overshadows investment prospects of the single European currency. The Federal Reserve takes a polar opposite approach. Jerome Powell has sent a message that the central bank is ready for a sharper rate hike of 50 basis points at a time at the nearest meeting. The US economy can't tolerate such aggressive monetary tightening. The Federal Reserve judges the economic conditions by metrics on the labor market, and employment figures prove healthy economic conditions. With such evidence, the US dollar is set to strengthen across the board. You have watched the Forex Trader Calendar on InstaForex TV channel, and we wish you profitable trading with InstaForex, and see you soon.